All right, welcome everyone to our weekly outlook. This is probably going to be our last weekly outlook for this year before we hop back in next year around second week of January, and then we'll go ahead and continue 2022 from there. So we're going to start off with the fundamental side, and then we're going to get into technical analysis with Stefano's here.
What's up, guys? Hope everyone's having a great end to the year. No one's blowing accounts, staying smart, staying disciplined. And also remember, before we get into all this, the year already started. So make sure that you guys are putting in work right now to get yourselves ready for January 1st so that you're not, January 6th, I believe you guys are back trading, or January 9th or 10th. You guys aren't just scrambling and so rusty, because you could get rusty over a week. So just make sure that you guys are staying disciplined right now, being smart. This is a slow week. There are some things on the economic calendar that we're going to go over, but it's a slow week. So be smart right now. We're definitely ranging on a lot of pairs, a lot of risk off right now too, with everything going on, which Sharma will go over. But I just want you guys to stay safe and not make any dumb decisions.
Anything that you guys have been struggling with this entire year, now is your time to go back, do simulation sessions, do back testing and all that type of stuff, and really hone down on that so then you're prepared for the upcoming year.
And reach out to both of us. Like if you guys are, towards the end of the year, you guys want to get ready for next year, reach out to one of us. I'm sure Sharma will hop on a Zoom too, and we'll just go over your trading and some of the things that you're struggling with, and hopefully we can help out. So do not hesitate to reach out, because we're definitely looking to help.
Yeah, and even when you guys are commenting any questions or anything like that, we try to get back as soon as we can.
Yeah.
So let's go ahead and get started now. So we're going to start off with the UK, and then we're going to go ahead and move on to the US side. There's not much happening when it comes to the Asian markets just yet with the Japanese yen. So we're not seeing too much. But overall, when it comes to global macroeconomics, global fundamentals, we are definitely seeing impacts of the new variant when it comes to traveling, when it comes to businesses, when it comes to the labor market side, when it comes to consumers. So overall, we're starting to see this effect coming into play all across the countries, all across the world. And so let's start off with the UK first, where you have Johnson holds off on extra virus measures amid the new variant surge that's going on here. And so earlier this weekend, what we saw was there was still this potential of new measures being put into place, stricter restrictions, new lockdowns potentially, as the cases are increasing in thousands, right? In the digits of thousands in the UK. And now they're fearing that that may ultimately lead to an overwhelmed healthcare system again. And so because of that, they're saying that, hey, now as you're coming to holidays, people are obviously going to be getting together, throwing parties and all that type of stuff. So same thing that we had last year, where they're saying that, hey, limit the amount of people that you're hanging out with, the amount of people in a room, close events, no large events, nothing like that. And so they're really bringing in these restrictions again. And obviously they're pushing new vaccinations because of the new variant as well. So we're going to touch on that slightly a little bit as well, but that's pretty much what's going on right now, where a lot of the scientists, they're coming forward and they're telling Boris Johnson and a lot of other leaders as well that, hey, go ahead and we should start looking into stricter restrictions. But Boris Johnson here is holding off on introducing those stricter restrictions to clamp down on surging new wave of the virus. But he has left the prospect open if there are going to be needed soon. So around the holidays, already Christmas is coming up in a couple of days, and then you have New Year's. So if need be, even going into the new year, we could see some of these restrictions coming into play, but it depends on, again, all that data from the virus numbers. And then he's saying that we won't exclude going further if we have to do things to protect the public. But for now, there are still some things that we need to be clear about before we decide to go any further. So those government scientific advisors are saying that go ahead and implement some of these new rules sooner rather than later, because then there will be a surge in hospitalizations. And if you have an overwhelmed healthcare system, then you are going to kind of get into this rippling effect that we have seen into potential lockdowns. And there's a ton of uncertainty. So he's saying that there's still uncertainty about the severity of the new variant and its expected impact on hospitalizations and deaths. So you have a lot more details as you go further down into this article, pretty much. But that's pretty much what the main point is at the moment, where the prospect is there, is still open, but they're not implementing it just yet.
Anything is open.
Yep. And then now this is the effect that this is just one scenario. This is just one thing that we're seeing at the moment, but you're starting to see the effects of the new variant into a lot of different sectors in the economy. So here, the UK firms are bracing for a Great British Resignation in 2022. So we had one in 2021 in the US. What the Great Resignation is pretty much a lot of employees, mass groups of employees are just quitting voluntarily. Right. And these are things that Stefanos and I have been talking about in our past weekly outlooks for like several months now, where people have been, there's like this huge gap of jobs actually opening up and people actually going and getting those jobs, right? And so that's what the Great Resignation is. And so now there's going to be, that started in the US, and now you're starting to see that rippling effect into the UK in 2022, where the UK businesses are being hit very hard by the rising number of staff leaving their jobs voluntarily during 2021, with many employers facing the prospect of more resignations and a hiring crunch going into the third year of the pandemic. That's crazy. We're in the third year of the pandemic.
Oh, I don't want to talk about it. Yeah, UK shopper numbers were down 8.5% last week. So, that could just be the immediate lockdowns, what they're doing in London, stuff like that. They said London was like empty basically the past week. So, that's a big indicator right there, especially Christmas right around the corner, and shopping's down 8.5%. So that's pretty good for the economy.
And that comes from the inflation aspect too, right? Where inflation is through the roof. They're not able to control it. And that's one of the reasons why we saw Bank of England recently coming out with a rate hike. No one has done that yet. People are taking the route of pulling back money and tapering and all that type of stuff, and then getting into rate hikes. That's what the talks in the Federal Reserve have been as well, right? UK has been the first one to increase rate hikes because the interest rates is one of the main tools that any central bank has to fight against inflation, right? And so a lot of people now, because of inflation, they are not going out, and we're not seeing those shopping sprees that we usually see around holidays, because now people are taking advantage of sales instead, right? You have Black Friday, Cyber Monday, and like so many other sales that are going on. And that's what people are taking advantage of, because now things are getting a lot more expensive. And so exactly what you said, that's one of the indicators that, hey, we're around holidays. Why are we not starting to see shopping sprees? And not even just, in store, but even online. A lot of people have been shopping online, but we're not seeing that yet either.
Yep.
And then, so 60% of managers in the private sector said that it is now harder to recruit for job roles than it was in pre-COVID in 2019. So now you're starting to see this effect onto the business side, on the labor side. And this is just one example, right? And so there's a lot more. So we were just talking about consumers, for example. There's a lot of other examples. There's a lot of other sectors of the economy that have been hit hard because of the new variant plus inflation. And so you're seeing the same thing in the US as well. So these are two examples when it comes to macro fundamentals. You're seeing the same exact thing happening in a lot of different countries all across the world, where this new variant is taking over again. And then you're starting to see businesses shutting down. You're seeing effects when it comes to inflation and all that type of stuff. So same thing in the US with 73% of COVID cases are because of the new variant. And the new variant is now also the cause. So this is supplemental article right here, but this is shutting down a lot of conferences. You have cancellations and shutting down companies, universities, holiday shows, and all that type of stuff. So now you're starting to see I guess you could call it a form of a lockdown in one way or another, where there's a ton of cancellations that are happening, even traveling here.
Yeah, we're feeling it with the driving company right now. It's why I've been able to be at home all day on my computer, which is awesome. But also I'll be able to do that tomorrow as well. So it's always look at the bright side.
And so the jump in the new variant was expected, and it's similar to the pattern seen worldwide. So this is the same exact thing that you're seeing all across the world here. So now that's pretty much the macro fundamentals. And then this week, when it comes to the economic calendar, pretty easy start to the week, right? Not much happening. You have the monetary policy meeting minutes from Australia, but that's pretty much about it. And then going into tomorrow, you have core retail sales from Canada, the current account, the consumer confidence from the Euro into the New York session. And again, not much happening again. So you have the consumer climate going into the London session, and then you have the business investments. So if you're trading London session, these are the two things that you want to be watching out for. Those are the only things that are going to help you from a fundamental perspective. So the next couple of days, it's all going to be technical moves. So you have to wait for your break and retest. You have to wait for whatever other confirmation that you use technically. And then from a fundamental perspective, going into Thursday, you have the GDP from Canada, and then you have the core price of PCE as well. Can you guys hear me okay?
Oh, yeah.
Oh, okay.
I'm clear.
All right, awesome. Yeah, so then you have on Wednesday, for Asian session, you have the Bank of Japan governor speaking, and then you have core PCE. So these are the two strong fundamentals that you want to be watching out for if you're trading this week. This is what's going to help move the markets. So you're going to have the Bank of Japan governor speaking, and then you also have, this is going to be very important on Thursday because this goes right into inflation. This is a change in the price of goods and services. The only difference is that it's excluding food and energy. So these are things that are directly targeted towards and consumed by individuals. And then on after that, you have pretty much, go ahead.
I was going to say those are the two categories that are seeing the most inflation,
Mm-hmm.
Food and energy.
Yeah, and then you have a rippling effect into everything else.
Yep.
And then after that, pretty much you have a die down in the rest of the session. So not much coming out, personal income, unemployment claims. So these are some of the things that will be affecting your 15-minute timeframes, but nothing more than that. And then after that, you have the German bank holiday, and then all of Friday is the US bank holiday. And that's pretty much when you're done for the year. So going into next week, you should be doing a lot more simulation sessions, back testing, and that type of stuff from a fundamental perspective when it comes to economic calendars and actual high impact things that are going to be moving the markets. You're pretty much done for the rest of the year. And then we're going to get into the technical side with Stefano's here.
Absolutely. Let's share the screen.
All right, go for it.
Perfect. All right, let's get into it. So let's just take a look at the past couple months over here. I'm actually just going to hide the video. Can you guys see the video?
No.
You can't at all? Okay.
No, I've moved it to the side here.
Perfect. Perfect. So looking over here the past couple months, this big bullish move right over here from 149.
Actually, sorry, give me 1 second here. I think we should turn off our videos because when we record and post this, I think the videos will still pop up on the side.
Okay. So I'll stop mine.
Yeah, just stop mine too. All right.
Perfect. All right. So looking at the past couple months over here, we see that we had this massive bullish run just based off sentiment that the Bank of England was going to increase rates. We end up meeting up with 158, a previous bearish trend over here from the yearly bearish trend, multi-year bearish trend. We meet up with that area, and we all of a sudden start rejecting it and coming right back down to 156 and closing at 156. Then all of a sudden we get news right around here that the Bank of England was not going to increase rates back in November like they said they were going to do. And we ended up rejecting and basically correcting this entire move. We did correct the entire move. Now, this is a very strong bearish candle right over here. This candle, it looks like already created its top wick from the rise in interest rates, right? They raised the interest rates. We got a nice spike up. And then all of a sudden, what I think is going on, it's not an actual healthy economy right now. So that's why we ended up rejecting that bearish trend channel that we have right now. I'll show it to you on the lower time frames. We ended up rejecting that area and coming right back down to 149,600, and we're kind of holding support right over there. Looking at the weekly, time frame by time frame, looking at the weekly, you can kind of see the bearish trend that we've been respecting over here. Get this huge rejection of this previous area of 152,700. We ended up rejecting that bearish trend resistance and then closing a weaker bullish candle. This current weekly candle already created its top wick and already passed the low of that candle. So could we be coming right back down to 149, knowing what we know now with the Bank of England, with the current economy and state of Great Britain? They're getting hit daily of these Omicron variant. cases. Now, the good news is it sounds like it's not nearly as serious as Delta. It's just really transmitting pretty quickly. It's the I think it transmits like 70 times more than the actual Delta or regular COVID variant. So that's some good news that it's not nearly as serious. It's just seeming like everyone's getting it now. Like it feels like early 2020 where everyone was just popping up with COVID. It's pretty crazy. So obviously that's not good. There's a lot of risk off sentiment right now where you're going to see a pair like GJ, a pair like GU, any kind of higher risk pairs, same thing with any kind of AUD pairs, you're going to see them all bearish because those are risk on currencies. So people are taking the money out of that, putting it into any kind of metals, putting it into the US dollar, putting it into Japanese yen, Swiss franc, any of those safe haven currencies. So it looks like we're holding this resistance at 150,500 right over here, right? Previous support, previous key area over here. So we can look at that on the daily. And it almost looks like a fake. It actually is a fake out. 150,500. We ended up closing right back below. Now, over the last week over here, when we were kind of in this range, we ended up grabbing liquidity up here and then rejecting this level of 150,500, very key area over here, and then coming right back down to hold support. What we were saying in the group during our live sessions was that price, if we break out of this consolidation over here to the upside, we could be coming into this key area, maybe tapping into previous support over here, rejecting and continuing down, or maybe somewhere in here where we have that trend line meeting up, where we end up rejecting this level to continue right back down, or we break that trend, we hold support, and then we continue right back up with the rise in interest rates. But again, being that the economy is not that strong right now, strong enough to actually increase interest rates before tapering, you're going to have a nice little spike up, and then we end up rejecting this area. So now we get a fake out. What happens when we get fake outs like that? There's a good possibility that we're coming right back down to this support, right? There's a lower possibility that we break through that support, but I definitely see it happening. We already created our top wick over here on the daily, and we're starting to come into this area over here to see if we can fill this wick and continue right back down. But this seems like a significant support that we get to break through right now.
Yeah, so even with the fake outs right there, so yeah, you have the one thing to kind of understand from a fundamental perspective is you have the increase in interest rates. But if you have inflation and you have so much fear that's already settling in, where businesses are, seeing a huge shortage in labor and all that type of stuff, you want to take a look at how does all of that impact the overall economy, right? So you have the increase in interest rates, but now you're just kind of making it more expensive for people to borrow. Yep. Right. Versus with lower interest rates, it's a lot cheaper for people to borrow. And that's why a lot of people, that's what spurs up the consumer spending. Right. And so exactly what you're saying here, Stefano, is where there's still the economy is not healthy for an increase in interest rates. There's still a lot of things that have to go into play. So now, are we going to end up seeing what we saw in the past recession, just a different variation of it, where they increased the interest rates, and after that, all you saw was this meltdown happening, and that's because the economy was not ready for it. And so that's what that fake out is right there. Is the anticipation leading to, are they going to taper? Are they going to talk about increase in interest rates? And as soon as it talked about interest rates, you had surrounding fundamentals coming out around the new variant, and then the businesses and the great resignation, even with Brexit and all that type of stuff that's going on there, where one of the Brexit ministers just quit recently going into 2022. Right. Yeah. So you have a ton of stuff that's happening, and that's why you have those fake outs happening, grabbing liquidity and then pushing right back down.
Absolutely. Yeah. When you increase interest rates like that, when it's not really ready, I mean, even if you are ready, you're going to see a decline in GDP. You're going to see a decline in any kind of manufacturing or anything like that, because it costs more to borrow, it costs more to leverage your business, right? So it's something that you're going to see a big tank on the market once we start to hit. Actually, if you look at the US 30 right now, you see how we're stalling out a little bit. Now, we could just be correcting and continue right back up, but you see some of the highs being hard enough or a little bit too hard to break, where we ended up tapping into this area up here. We end up no, this is not US 30. There we go. So US 30, we've been like making these little corrections over here. We've had these short spurts of fear in the market, right? COVID coming in, stuff like that, where, price is tanking right back down to 33.5 flat, and then continuing up to make a complete, a new historical high up here. So now we ended up dipping right back down here in the beginning of December, and then rallying all the way back up to this area over here. But we ended up failing to break the previous high, right? So we're kind of stalling in this area and kind of holding a resistance right up here and continuing down. Again, we keep getting these corrections, and we could be continuing right back up, but expect this thing to fall once we start tapering it and the increasing rates. We could be coming down to this key area of 33.8 right down here. And then once we break 33.2 over here, or 33 flat, I think the stock market is going to be in a little bit of a trouble.
Even in that case, you're going to see the Fed stepping in and kind of injecting the market again.
Yep.
But something that's interesting to see here, even on both of the daily timeframes for GJ and for US 30, look at what predominantly happens in this area, right? Where price is sitting at. All you see is a ton of consolidations here, right? So a ton of consolidations, a ton of liquidity grabs. And how do you know that all of this is liquidity? Because once price does end up breaking out of it and gives you a nice retest, there's a ton of volume that follows right into these areas here again. And then if you're pushing back down, same exact thing. So if you go on to GJ here on the daily time frame, it's the same exact thing. If you were to zoom out a little bit, where right now, right underneath this consolidation, look at what price has been doing in these areas. All you get is fake outs, and then right after a fake out, you get a ton of volume. It's either consolidation, fake outs, or wick rejections, and then you have a ton of volume right after that. So this right now that you're sitting in is pretty much a very strong support area, liquidity area. People call it supply area, whatever you want to call it, whatever terminology that you want to use. Pretty much this is where a ton of liquidity is. And if this area is not being broken, then you're looking for another push right back up.
Mm-hmm. Absolutely.
And that plays right into that monthly consolidation that we see.
Yeah, so we just got to be aware of this area. That's what Sharm was saying. A little bit better. Yeah, somewhere in there. Looking over here at the 4 hour now. The 4 hour, again, we're holding the support right over here. 149,600, I would say.
Mm-hmm.
Somewhere right in there, we actually held support this morning, right? We made that bearish move coming right back down to 149,600. Clearly a demand zone where we make that move up. And we ended up retesting this area up here and held resistance. I like this setup a lot. It really depends on if we have enough pips in this area. But based on the 4 hour so far, you got about 30 pips right here. So based on the 4 hour right here, if this was like a 30-minute, you could take a nice scalp coming right back down. If that candle passed the low of that candle right there, this is typically the setup that I like on the lower time frames as a scalp, where you get that strong bearish candle retesting that area, get a weak bullish candle with a weak body. Next candle creates a top wick. Normally it's not that long. It stops right around here. And then we end up passing the low and we come right back down to fill that wick and retest the low. So that's something I'd like to look at on the lower time frames. But let's see what we look like on the 1 hour, because I know, once we get into the lower time frames, we have this area right here that we're going to have to worry about, where price is rejected multiple times over here. And we got to see if price is going to close below that before we take anything down.
I also meant to call it a demand zone. I think I called it a supply zone.
I was going to correct you, but I was just like, she knows what she's talking about. And there's no point.
People get the point.
Yeah, exactly. So again, we got that area, 149,900 over here, previous demand zone again. A price just tapping into this area over here that we need to clear. I do like the resistance up here. I keep getting the zoom drawing tools instead of, there we go. So we're kind of sitting in this range right over here. We're making lower lows, lower highs over here. We've been pushing down since that interest rate correction. You can draw your trend line however you want. Doesn't, we know we're in a bearish trend. You don't have to go crazy with them or, think you have them drawn wrong. But right now we are holding a resistance and kind of rejecting that resistance as well, 200 level. But we just need to close below 149,900 before we take this down. Got a clean move to the left, but we definitely have a zone that price likes to tap into at 600 down here. See what the 30-minute looks like finally. Yeah, we keep rejecting. We rejected over here hard. We keep pushing down. We push down into this level, but we need to close below for price to continue right back down.
Yeah.
Um,
So when you're going to see a lot of this for the rest of the year, maybe even the first 2 weeks or so
Yep.
of the new year. So now this is where it becomes very important that you look for those break and retest on the 30-minute, on the 1 hour, on the 4 hour time frames. You make sure that your higher time frames are in line with what you're looking at. This is not the time where you're going to be looking for those trade opportunities on the 5-minute, the 1 minute. 15-minute may not even be strong enough. So it's very important now that you start looking for your technical confirmations on some of the higher time frames.
Yep, absolutely. Yeah, I mean, when we were trading live this morning, I was telling the group that I'm basically done for the year. Like there were a couple of trades we could have gotten this morning, but it would have been on the 5-minute on GJ, one of the trades that we had the opportunity to take, and it's just like, yeah, you have a great year. What's the point of jumping into these trades? If anything, just lower your risk. But you want to look for high probability setups and not try to force anything, and just go into the new year confident because you manage your trades. You made the right decisions in the market as well. So yeah, that's just the best way to go. So moving over here to gold, it'll be more of a quicker breakdown over here just because we're really consolidating on the higher time frames. Again, we have a lot of fear in the market, a lot of things going on. So we are holding a support around 1752 as a strong level over here, strong wick rejection. We keep holding support here. So let's see what's going on the lower time frames. But currently the December candle passed the low of that candle right over there, but we did flip bullish, have this top wick to fill. What are we going to do in this area? So again, we're just kind of consolidating over here. We're holding 1762 significant level over here as a support. Nice demand zone again. We got that strong bullish candle. Is this candle creating a bottom wick to flip bullish and continue up to fill that wick and continue up to 1830 strong level? Or are we just going to continue to consolidate? I personally don't really want to touch gold too much. We ended up breaking out of this consolidation over here, but now we're starting to come right back into it. Right? So we had this consolidation, previous support became a new resistance over here. We ended up breaking out of that whole area. I want to, draw the levels a little bit clearer on the lower time frames. So far, this looks like a significant area that you want to mark off over here. But everything's just a mess. Everything's sideways. Like I know a lot of people that have blown accounts and stuff like this just because everything's 50-50. You don't have probability really on your side too much trading in this. We did get a hard rejection at this level, 1810. We know that's a strong level up there. With this bearish candle, created a top wick, passed the low of that candle. Now this candle's starting to come right back down into this 1787 zone. So we're obviously having a lot of issues trying to close above 1800 over here. Keep rejecting it. Looking at the 4 hour, we're kind of just pushing down over here, making lower lows, lower highs, perfect formation. Clean move to the left. We just broke this support over here. Never ended up retesting. Let's see if we match up or line up with anything over here. There you go. Kind of respecting this bearish trend over here. Making these lower highs. We are holding this support, kind of like a double bottom. Continue right back up to this level to retest to then continue right back down. I'm more interested in the support and resistance over here than this trend line, but it does make sense over here. So we need basically I really don't want to trade in this whole area. Like this is an area that you really want to stay clear of. Honestly, this whole range, I would do that for. But let's see right over here. You do have some clean candles as of late over here. So what you want to do is not try to sell right now. Like you think you're missing this trade right now and price could come all the way back down to here. What you want is the opposite basically of a discount. You want to be able to sell this a little bit higher, right? Instead of selling at the low, you get stopped out of here. Price comes up here to perfectly retest, and then you continue down. I would wait for something like that to happen over there for any kind of intraday trade. So far, I mean, it is looking good over here to come right back down into this area. But again, everything's 50-50. You just got to make sure that, you're trading in this whole area right here. So just be careful. Don't make any subtle emotional decisions. But this whole area is just it's tricky to trade, even though you do have some nice price action right over here that we could come right back down into here.
So there's a couple of things I want to point out here for gold. So if you go back up to the 4-hour time frame, and I'm just going to use that as an example, you can use that on any other time frame. But if you're really trying to understand how do you use fundamentals and then apply that onto the technical side, can you zoom out just a little bit more where your trend line started? There you go, perfect. So pretty much here, you had that nice bullish rally, right? And the bullish rally was coming obviously from the fundamental side. Every time we see any sort of consolidation happening here, like we have any consolidation, this is coming from the uncertainty from the fundamentals. And then we had another nice sell-off happening. This is pretty much that downtrend that we have been seeing from those higher timeframes and continuing down to lower timeframes. So you had that nice sell-off, but again, this is where the market started collecting orders. We are still in an area where there's a lot of mixed fundamentals coming out. You have rising interest rates from the UK. You have the Fed tapering, right? But then you also have a lot of fear when it comes to the new variant, when it comes to the labor market, when it comes to consumer spending, right? There's a ton of mixed fundamentals that are happening at the moment. And around this time of the year, like we talked about earlier in the breakdown, where consumers are usually spending a lot, which they are not doing anymore. So there's a lot of mixed fundamentals. This is all consolidation from that monthly time frame that we just looked at, from the weekly time frame that we just looked at, from the daily time frame. So that's how you're seeing the fundamentals applying on the technical side. The technical side on the candles here, they're not just consolidating just to consolidate. They're consolidating because the fundamentals are not there to support these moves. Mm-hmm. Even here, when you're finally breaking out of all this consolidation here, and then if you extend that over to the left, it's the same exact thing. This is clearly a very important zone, right? Consolidation, consolidation, consolidation. It's either a consolidation resistance or it's a consolidation support. But every time price respects it, there's a ton of volume, right? All that consolidation support, consolidation resistance. This is the same level that we're sitting at the moment, even on that hourly time frame. So if you have that break and retest and continue down, you necessarily don't have a sell opportunity until you break below this, because we have seen price react off of it. What did price just do here? Broke out of that consolidation. Pretty much, if it does not break below that, this is just a retest to continue back and come back into these areas here again, right? And so you want to look at it from a fundamental perspective, but also keep it very simple when it comes to technical analysis. Downtrend, this is what you're looking for. Uptrend, this is all you're looking for, right? Keep it very simple. All of this right here is either a consolidation support or resistance. Just extend that line over to the left and you'll see it over and over again, right there, consolidation resistance. So you need to break below this for any sells to continue down. But again, this is a very tricky area. So I wouldn't go in with a high risk. This is something that I would risk 1% on.
Yep. Yeah, if anything, I mean, like I was saying before too, you can also wait for some kind of reaction to this level, this whole zone over here, for price to come right back up to here. And this might be your move where price just retests that area. Nice and simple. We come right back into this supply zone.
Right.
Retesting that area over there, and then we continue right back down with some clean candles to the left over here, right? And then that could possibly continue right back down into this area over here, where we then get some, sticky area to the left.
And this is where you start taking partials. You look at these levels, you start taking partials, going risk-free, and then waiting for clear breaks before another scaling.
Absolutely.
Awesome. Does anyone here have any questions whatsoever about the fundamentals, technicals, any of the pairs, anything like that?
Let me get a reaction over here.
All right, everyone's good. Seems like.
Yeah, that's awesome. Let's see. No. Cool, Jen. So this price action is looking a little sticky over here. 30 minutes bouncing off that 200 EMA.
Yep.
And we're starting to get into that area. So I would just be aware this candle passed low already and that one's starting to flip again. Again, if we break resistance here, we could come right back up into here and then continue right back down. Absolutely, Carlos. I'll see you tomorrow morning, buddy. You guys have a great rest of the week. Wednesday we can you want to try live?
Yeah, let's do it.
All right, cool. So Wednesday will be the last one of the year, and then we'll get right back into it with I believe January 12th. 12th will be the next time we're all going live on YouTube again. So with that being said, guys, have a great night. Sharma, you want to say anything?
Yeah, so just be careful. I mean, right now, just doing the breakdown, we just saw the hourly candle showing us some volume, that uncertainty and whatnot. So this is just prime example. Wait for your confirmations, wait for these levels to be broken, and then look for your entries. Just go right back up to higher time frames. As we broke down the 30-minute time frames on GJ and here, I think even on gold, we went all the way down to 30, right? Yeah, so even here, you have all this consolidation. This is exactly what you're going to see for the rest of the year. So be very careful. You guys need any help, always feel free to reach out to Steph Knows RI, and we'll be more than happy to help you out.
Absolutely.